Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And we are looking at what's playing out in the third quarter off the back of a second quarter that has been dominated by three T's: Trump, tariffs, and trade wars. So could we be in for a fourth T? Taco. Trump always chickens out as we head towards the August 1st tariff deadline. And what are Singapore investors doing in the backdrop of all this uncertainty? Let's check in now with Isaac Lim. He is the Chief Market Strategist for Moomoo Singapore. Isaac, good morning. How are you doing today?
Hey, good morning, Ryan. Thank you for having me on the show. It's good. It's cold. It's rainy, but happy to be on the show.
Well, great to have you on because you've been tracking what's been playing out for the good part of this year. Let's start there first with what we have in front of us, which is the tariff deadline. Do you think we're going to see a fourth T? Trump always chickens out?
I think because of this taco trade thing that you just pointed out, the sentiment that we're sort of seeing in the markets is that for second half 2025, it seems to us that Trump is actually sort of reverting back to his old playbook of loading on more tariffs. Right? Very recently at the start of this week, he announced 25% tariffs on our neighbor up north in Malaysia. And he also announced another 25% tariffs on Japan, South Korea, up from the 10% previously, right? So it seems that he's reverting back to his old playbook. And the sentiment, as I mentioned, is that, the world is sort of moving on, getting tired of it, sort of moving on. But at the same time, US as a market that forms a bulk of a lot of investors' portfolio out there is also very hard to ignore. So it's sort of, we got to keep our thumb on it, monitor the situation, and at the same time, start looking elsewhere for other opportunities as well.
Let's talk about some of these opportunities. So looking at what's been playing out in the Singapore markets, we have seen new highs being reached. How much is that, you think, capital flows, looking for safe havens?
Very, very astute observation, Ryan. What we're seeing is that there is a pivot over to the Singapore market because given the volatility on the broader market, Singapore markets is starting to look like a safe haven for a lot of investors. Over here at Moomoo, for our very recent H2 second half of the year retail sentiment survey, what we actually did is that we surveyed our users and we found that over 70% of our investors actually plan to maintain or increase their Singapore equity exposure. This can be attributed to, I think, two main factors. One is that, as we just discussed, it is actually seen as a more defensive sort of a play, given that STI and our stock volatility isn't as aggressive as the other countries, right? That's the first thing. The second thing is that, the move that we're seeing is sort of market pricing in, being a bit more forward-looking, pricing in future rate cuts that could come off from the US and then trickle down over to the Singapore side. And that would actually end up bolstering our REITs, which if we look at the overall S-REITs index, it has actually been basing and consolidating quite nicely, right? So it hasn't been dropping lower, and I do like this base over here that we're seeing in the Singapore market. So I think for these two reasons, that's why we're seeing a bit more capital flows. We're seeing an increase in demand, both on our user end and overall from a broader market perspective.
Yeah, let's unpack that a bit more. So we have the Singapore market that's heavily skewed towards financials as well as property. Now, is that where most of the money is going to?
Not an easy question to answer, but definitely over the past, if we're just looking at the Singapore market alone, over the past couple of weeks, right, rounding off the first half and going into the second half of the year, yes, there is quite a bit of flow going into the property market, especially, we see names like Hong Kong Land that has really been doing well, Capital Land Investment Trust also doing quite well. What's also interesting is the fact that, we are actually seeing our consumer stocks that are picking up pace, right? We are seeing things like DFI Retail Group, right? Jardine Matheson Holdings that are also climbing as well. So I think we're seeing a bit more of a pickup, a bit more of Activity in Singapore markets. I'm excited about that. Actually, it's not really the usual three big banks, DBS, UOB, OCBC, or even like Singtel. Yeah, so it's nice to see, that investors are actually keeping an open mind and starting to be a bit more forward-looking this time.
Yeah, quite interesting when you see how the Singapore market is performing versus US markets. Typically, when you get a bull run, you see S&P 500 up and away, and the STI trying to catch up. So now you're both doing pretty okay. So on that front, how much are investors looking overseas at the moment?
Yeah, I think, again, I'm just going to refer back to our sentiment survey, right, based on our user pool. We are seeing that, there are a lot more investors that are looking to shift to other markets, such as Hong Kong, the Chinese markets, right? We are also seeing quite a bit of search popping up with exposure to the European side, right? So overall, we're seeing a bit of looking at the higher risk investors, the more savvy ones. It's quite a huge proportion. 41% of them are actually starting to reallocate their portfolio and readjust. Right. So I think, the US exceptionalism, back to your first point, the taco trade, probably because of that, I think investors are losing a bit of confidence in the US, getting a bit tired of the tariff game that Trump is playing and looking for more stable options elsewhere.
All right, let's take a look at what is also in favor when you look at risk appetites. It does look like crypto has been doing well in recent times. Bitcoin breaking above $100,000 this year. Is that a place that's also attracting inflows?
Yeah, definitely. I think especially with the very recent Genius Act that, was announced over in the US, which really gave that boost to the whole idea of incorporating stable coins in corporates, right? So because of that, we're seeing a huge uptick compared to the first half of the year. We're seeing about 8% of all investors looking to increase their crypto exposure. In fact, what is actually interesting, right, is that while 8% of all investors are looking to increase crypto exposure, 5% across all risk profiles, so low risk, medium risk, and even high risk investors, 5% of them are saying that the biggest bulk of their overall portfolio comes from crypto, which is quite interesting. I think there could be a bit of a data mismatch over there when you're saying that low risk investors, the biggest part of their portfolio comes from crypto. But then again, if from their perspective, stable coin is something that is quite low risk, given that there's a huge institutional uptake, there's a lot of interest coming in from central banks, then yes, that makes sense.
Yeah, a lot of supporting narratives, including how it is an alternative hedge to inflation. So we have seen Bitcoin prices up and away, 88% year on year. So definitely something to keep track of as we head towards the rest of 2025. And we have been in conversation with Isaac Lim. He is the Chief Market Strategist for Moomoo Singapore. Isaac, thank you so much for helping us to navigate what's playing out in the markets right now.
Thanks so much, Brian. Thank you for having me on the show.
Hoping to catch you again soon.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.